April 14, 2026, Bitcoin's ripping to a 2-month high, Goldman Sachs is trying to sell boomers a yield product, and we need to talk about a scam that robbed 50 people on the App Store. Quick shout to today's sponsor, Compete Token, the gaming crypto that actually has real games. Link in the description. Bitcoin just blew past $76,000, its highest price in 2 months, and the short sellers got absolutely wrecked. Over $600 million in liquidations in 24 hours, with $488 million of that coming from shorts. The March PPI came in at 4% when markets feared 4.7, risk-on mode unlocked. US-Iran ceasefire progress added fuel to the fire. Strategy dropped another $1 billion on Bitcoin. Ethereum ripped 8%. The total crypto market cap hit $2.6 trillion. The bears built their whole thesis on that PPI number coming in hot. Oops, there was a fake Ledger Live app sitting on the Mac App Store for 6 days that just drained $9.5 million from more than 50 victims. On-chain detective Zach XBT traced the theft, running from April 7th to the 13th, across Bitcoin, Solana, Ripple, Tether, and more. 3 separate wallets lost over $1 million each. One wallet alone was wiped of $3.2 million in Tether. Musician Garrett Dutton, better known as G-Love, lost $447,000 in Bitcoin after downloading the fake app. Apple eventually pulled it on April 13th. Apple runs one of the most controlled app ecosystems in tech. A crypto-draining scam sat in its store for nearly a week and cost people real money. It's a walled garden doesn't hit the same anymore. Goldman Sachs just filed with the SEC to launch a Bitcoin income ETF, and Bloomberg's top ETF analyst already has a perfect name for it. The Goldman Sachs Bitcoin Premium Income ETF would keep at least 80% of assets in Bitcoin-linked products, then sell call options on those positions to generate yield for investors. Eric Balchunas called it boomer candy. I cannot improve on that description. BlackRock filed for the exact same type of product back in January. Goldman also just acquired Innovator Capital Management, one of the top 10 active ETF providers globally. In 2017, Goldman was publicly skeptical of Bitcoin. In 2026, they're racing BlackRock to see who can package Bitcoin in the most conservative wrapper possible. Progress. The SEC just issued formal safe harbor guidance for DeFi front-ends, and if you build in this space, this is actually huge. Staff guidance says covered user interfaces, meaning non-custodial DeFi front-ends that don't make trade recommendations and charge flat neutral fees, do not need to register as broker-dealers. That covers basically every legitimate DeFi app that exists. Commissioner Hester Pierce has been pushing for permanent rules, and this is the clearest signal the industry has gotten in years. The fine print, it's staff guidance, not law. A future administration can reverse it. But for builders right now, green light, you can breathe. The Frankfurt Stock Exchange just spent $200 million for a piece of Kraken, and traditional finance is completely done pretending it doesn't care about crypto. Deutsche Börse acquired 1.5% of Kraken's parent company, valuing the exchange at $13.3 billion. The deal covers foreign exchange liquidity, custody, settlement, collateral management, and tokenized assets. This follows ICE, the company that runs the New York Stock Exchange, putting around $200 million into OKX. When the institutions that built the legacy financial system are buying stakes in crypto exchanges, it's not a debate anymore. They're not studying it, they're buying it. The man Donald Trump picked to run the Federal Reserve just filed his financial disclosures, and buried inside is a crypto portfolio. Kevin Warsh, whose Senate confirmation hearing is April 21st, reported investments in Solana, Blast, Optimism, the DIDX trading platform, Dapper Labs, Polychain Capital, the prediction market Polymarket, and SpaceX, net worth over $100 million. The sitting Fed chair spent years calling Bitcoin a speculative asset. The guy who might replace him is quietly holding the thesis. Jerome Powell's term ends May 15th. The handoff is coming. Visa, the company that processes trillions of dollars in payments every year, is now directly running a validator node on a crypto blockchain. Visa became an anchor validator on Tempo, the Layer 1 blockchain backed by Stripe, built for real-time stablecoin payments and machine-to-machine commerce. Visa spent 6 months building the infrastructure in-house with Tempo's engineering team. Stripe and Zodia Custody, that's Standard Chartered's crypto arm, are the other anchor validators. Validators earn stablecoin rewards when they process blocks. The stablecoin market cap sits near $319 billion right now. The legacy payments industry isn't fighting crypto anymore, they're earning yield from it. CowSwap, one of the most popular decentralized trading aggregators, had its domain hijacked today and had to tell everyone to stop using the site immediately. The community behind CowSwap confirmed a DNS hijacking attack on their swap site, forcing a full shutdown of the backend and APIs while the front end was compromised. CowSwap's token dropped about 3% on the news. DNS attacks like this have hit Balancer in 2023 and Curve Finance multiple times. Blockchain security firm Hacken reported that Web3 projects lost $482 million to hacks and scams in the first quarter of 2026. You can write flawless smart contracts and someone can still just steal the front door. DNS security in crypto is genuinely embarrassing at this point. Hyperliquid's token is at its highest level since Halloween, up 108% from its January low, and Arthur Hayes just put a $150 target on it. Hype retested $45 today, only 26% below its all-time high of $59. Open interest hit $1.38 billion. Hayes' thesis is straightforward. Hyperliquid keeps eating market share from centralized exchanges. Its annualized revenue run rate was $843 million in March, and the HIP-3 protocol upgrade is already letting it trade real-world assets. That's a decentralized exchange with near billion-dollar annualized revenue, growing fast, with a credible analyst calling for more than a 3x move. The fundamentals aren't nothing. Rakuten, basically Japan's version of Amazon, is now accepting Ripple as a payment method for 44 million customers. That's not a pilot, that's a full-scale rollout to one of Japan's largest consumer platforms. On the same day, the Ripple blockchain integrated the boundless zero-knowledge proving network, letting institutions transact privately without exposing transaction sizes, counterparties, or treasury positions while staying fully compliant. More than $550 million has been deployed into the Ripple ecosystem. The Ripple community has been saying adoption is coming for years. Today, 44 million people in Japan can pay with it at checkout. That's adoption. Compete Token, the gaming crypto that actually ships real games. Check the description for the link. Outro. That's your crypto pulse for April 14th. Subscribe for daily news and we'll see you tomorrow.